let's talk about decentralized finance. Its story is almost like a modern myth. It had this spectacular rise, to just incredible heights, followed by a devastating fall that honestly shook the entire market. But now we're seeing this really determined comeback. This is the story of DeFi's journey, from pure, unadulterated hype to a whole new era of maturity. It all kicked off with a really simple but incredibly powerful promise. The idea that, hey, maybe we can build a financial system that actually works for everyone, not just for the big institutions. And this was the vision, right? This is what captured everyone's imagination and just set the stage for an absolute explosion of growth. So, what was this decentralized dream all about, really? Well, at its core, it was a vision for a totally new financial world, one built from the ground up on blockchain technology. Now, think about what this list actually means. We're talking about finance with no gatekeepers, no middlemen, a system that's open to anyone, anywhere in the world with an internet connection, a place where you could potentially earn higher interest, get a loan without needing a traditional credit score, and maybe most importantly, you are always in full control of your own money. This was absolutely revolutionary. But how in the world was any of this possible? Well, the engine running this whole operation is something called a smart contract. The best way to think about it is like a digital vending machine for money. It's just a piece of code that automatically carries out a deal, like a loan or a trade, as soon as the conditions are met. No bank, no broker, no one needed to approve it. It just happens. But, as you can probably guess, that decentralized dream, built on all this exciting new tech, it ran headfirst into a very, very harsh reality. The system's super fast, almost completely unregulated growth started to expose some incredibly deep vulnerabilities. Remember those smart contracts we just talked about? The engine of DeFi? Well, here's the catch. If the code isn't absolutely perfect, it can have bugs. And in the world of finance, bugs aren't just annoying. They can be exploited. This became one of the biggest risks in early DeFi, and it opened the door for some truly mind-boggling hacks. And this number, just let it sink in, $2 billion. That's how much was stolen in a single year just from hacks on bridges, which are these protocols that let you move money between different blockchains. A figure that huge, it just completely shattered people's trust. And look, this wasn't just a one-off thing. It was this relentless series of body blows to the system. You had the collapse of early projects from the ICO boom, where a ton of them just failed. Then you had the constant, nonstop drumbeat of hacks. And then the big one, the catastrophic failure of the FTX exchange in 2022, which sent shockwaves through the entire industry. So what really went wrong? Well, when the dust settled, it pretty much boiled down to these four things. The technology had major security flaws. The main network, Ethereum, got so clogged up that transaction fees, what they call gas fees, went through the roof, making it way too expensive for regular people. And honestly, a lot of these projects were just built on pure hype, with these crazy economic models that were never, ever going to last. But from the ashes of that crash, something new, something important has started to happen. A new phase that isn't focused on hype, but on building a stronger, more resilient, and actually sustainable foundation. And you can literally see the shift in priorities right here on this slide. The old problems on the left are being directly tackled by the new solutions on the right. Those high gas fees, we've got layer 2 solutions for that now. All that speculative hype, now the focus is all about generating real, sustainable value. It's a huge change. And these layer 2s, they're an absolute game changer. Think of them like express lanes for the blockchain. They process a whole bunch of transactions on a separate, super fast layer, and then they bundle them all together and settle it on the main network. This solves those awful problems with cost and congestion, and it's making DeFi accessible again for everybody. So let's take a look at the new trends and tech that are defining this second act for DeFi, because this is where the future of the space starts to get really, really interesting. So what's actually being built? Well, first up, we have tokenization of real-world assets. This is huge. It's about bringing things like real estate and bonds onto the blockchain, grounding DeFi in tangible value instead of just speculation. Next, AI is being woven into the fabric of DeFi, helping automate trading, manage risk, and spot fraud before it happens. And finally, the industry's building real insurance. This is a sign of maturity, right? It's about providing safety nets and taking user protections seriously. And lastly,
decentralized identity, which lets you prove who you are without giving up control of your data. Each of these is a massive step forward.
So, after this incredibly turbulent journey, where does that leave us? The path has been, let's be honest, anything but smooth. But the destination, that's finally starting to come into focus.
Which leaves us all with this one big question. After the spectacular boom and the really painful bust, what is the actual long-term future of decentralized finance? Is that original dream still alive? And the answer, I think, is this. DeFi isn't dead. It didn't fail. It's just growing up. The crazy hype is fading away. And in its place, there's this quieter, more focused effort to build a financial system that isn't just innovative, but is also secure, scalable, and sustainable. In short,